Commercial umbrella policies and excess liabilities policies typically sit above more than one type of underlying liability insurance. Commercial general liability, business auto, employer's liability, umbrella policies have traditionally been distinguished from excess liability coverage in that an umbrella may be somewhat broader than the underlying coverage. For example, an umbrella policy may include a worldwide coverage territory, which is often a broader coverage territory than found in the underlying liability policies. Excess liability policies are traditionally different from an umbrella policy in that the excess liability policies do not provide broader coverage than the policies over which they are excess, and they generally follow only the terms of the underlying policies. However, the distinction between umbrella and excess policies is fading and may even be misleading. Umbrella insurers do not generally drop down and provide coverage over underinsured liability exposures. In addition, some insurers use an umbrella policy form that may include the characteristics of both an umbrella and excess liability policy, usually by using a bifurcated, divided insured agreement. The first insuring agreement is the excess and follows the terms of the underlying policy. The second insuring agreement is the umbrella and covers liability exposures not covered by the underlying insurance. Be aware that in many instances, both insuring agreements are subject to numerous exclusions, and don't be overly influenced by the policy title. Some insurers will call their umbrella policies excess commercial liability, while other insurers will title their excess policies as commercial umbrella liability. The takeaway is that there is no substitute for reviewing the actual terms and conditions of the policy itself, including all of the endorsements. Point 1. All umbrella policies do not follow form. It is simply not true that all umbrella policies follow form and thus provide the exact same coverage as the underlying insurance.